Okay, we are on our 5th video for the Mastro Futures Trading Blueprint 2.0. I promise you guys we'll start jumping into the educational stuff. Again, we've been going over a little bit of the psychology stuff before the 3 or 4 videos before this, and we were also just going over what you guys should expect when becoming a trader or wanting to get into trading or want to study the way I trade and just learn a couple things from me in general through this blueprint. So again, first educational video, we're actually going to go over something. This video is going to be based more for the people who are just getting into trading. If you're more experienced, you should already know what this stuff means. So if you want to skip this video, you guys can. But again, we're going to go over candlestick anatomy just so you guys understand what a candlestick is, how it moves, what it represents, and what it shows us in the market. All right? Okay. I'm going to draw the stuff out for you guys on the chart just so we can go through it and understand what a candlestick is and how we use them in the markets to help us take trades or just know what the market's going to do. So first thing I want to go over is, again, you should already have TradingView or whatever you use for what you take your technical analysis or whatever you want to say off of what trades you're going to take and everything, just to observe how price is moving and everything like that. So again, I do have a TradingView setup video in my first bootcamp video, or the blueprint or whatever it's called. I forget what it's called, honestly, but the first one, and I go over how to set up a TradingView account, what to do, and what everything means and all the settings and stuff like that. So if you want to go watch that, you can go watch that. But again, if you already have this set up, this would be perfect for you. So usually what your typical trader uses, you can go up to the top corner up here in the top left corner, I would say, and you can see the candlesticks up here. There's bars, candlesticks, hollow candles, volume candles, line with. There's a bunch of shit here that I don't use and most traders don't use. Again, I just use the candlesticks because that's just going to show you the most information on what you need about the market. And again, some people might use this other stuff, but I personally just use candlesticks because again, it's going to show us what the market is currently doing on each time frame and either if buyers or sellers are in control or where the market's likely to go during that specific time frame. So first thing I want to go over is the basics of a candlestick, and there are 4 key points of a candlestick that I'm going to go over that you guys most likely need to know, and we'll go over bullish and bearish candlesticks, what they look like, and we'll also go over doji candles too to understand or help you understand what those mean also, and we'll also just go over, I think, one more thing at the end, but we'll see where or how long this video takes. But again, I'm not going to be teaching a bunch of the other stuff on what candlesticks mean towards taking a trade. Again, I trade totally different than that. I just use the candlesticks to get information to help get a clear bias in what direction the market's going to go and add that to what I'm going to teach you guys in the future in these next videos coming up. So first thing I want to start off with is, we'll get this little box tool over here. If I can find it. Yeah. All right. So we'll start off with a bullish candle. So again, your typical market or your typical chart, I guess when you get TradingView, is probably going to be green and red just like mine. I just keep it basic. You could change these whatever colors you want, but usually typically a bullish candle is a green candle and a bearish candle is a red candle. I just change my background to gray. You guys can customize your TradingView however you want. Again, I just keep green and red. It's just basic. People do blue and black, blue and red, whatever color you want. It's totally up to you. This is what I use. So for our bullish candle, we're going to keep it green. Usually a candle looks like this. You have right here. So that green area of a candlestick, which you'll see on a candle right here, that is the body of your candle. And then you're usually going to have these 2 little wicks, they're called. You can call them whatever you want, but they're called wicks that look like this outside of a candle. So again, the 4 key points of a candlestick is what we're going to go over here on this bullish candle. So there's an open, there's a close, there's a high, and there's a low, right? So let's say we were on the 1 minute time frame, correct? And this is our candlestick right here on the 1 minute time frame. On the 1 minute time frame, as you can see in these candles right over here, each candle closure is giving us information on what the candle did or how price moved within that 1 minute of time before it closed, correct? So on a bullish candle, the bottom here, this is going to be, we'll make this white for you just so we don't get it confused. This is going to be the open of your candle. So we have an open. So this is where price opened up at the start of the 1 minute new candle that's forming when a candle closes. So all right, so a candle closes, we have a new candle open up. Your candle's going to open up right here at the bottom for a bullish candle, correct? So market this candlestick opens up, 1 minute starts, and the candlestick decides to go up within that 1 minute, correct? And as you can see, we have this wick up here, and then we have this wick below. These wicks represent that the candle and the price of this candle got up to this point, but ended up coming back down and closing here. So we're going to go over the close real quick. This is where the candle closed. Excuse me, sorry. It's not that straight of a line. It's whatever. This is the candle close. And then like I said, before the candle closed, because we're on the 1 minute time frame, that means the candlestick, when you have these wicks, that means price came up all the way to this top, and before the candle closed, we ended up closing here. But also, let's say the candle opened up here, that means price came down, so sellers brought price down to here, but buyers took control, brought the price all the way up to here, and then the price closed right here, and then the next candle will form after that. So this top wick right here, this, oh, I keep doing that stupid line. This will be our high of the candle, which is pretty simple. This is our high. And then this right here would be, take a guess, your low. Okay? Boom. Right there. That easy. So that's what happens with a bullish candle. And we're going to go over the time frames and what the time frames mean for each candle. But first, I want to show you the open, the close, the high, and the low. So that's the example of a bullish candle. Let's move over here a little bit and then go over a bearish candle. So I'm going to get this tool again. We'll make a bearish candle. And then we'll do one wick here. And then we'll do another wick here. Okay. We'll make this red. So you guys know it's a bearish candle for the example. Make these red. Make these red. Okay. All right. So let's say this was a 1 minute candle we just went over on the bullish candle. Let's say our next candle is a bearish candle. On a bearish candle, price is going to open up where the bullish candle's close was. So it's the opposite. So price opened up here. Buyers took price all the way up here, but sellers took control, brought price all the way down within this 1 minute candle, brought it down to this level. Buyers brought price up a little bit more, and the candle closed here within that 1 minute candle frame, candlestick time frame. All right? So to go over that again, on a bearish candle, right? I don't know why I'm screaming. But on a bearish candle, this would be your open. OCD's gonna bother with that. This would be your open. It's pretty simple. This will be your close. And make sure you guys are writing this down and drawing it in your notebook also, just so you guys get this into your brain. This is still going to be the high of the candle. Nothing changes with that. That's the highest point of where price came up to within that 1 minute. Let's remember, we're going over a 1 minute time frame right now example, just to learn the highs, the lows, the open, and the closes. And then this, of course, would be, take a guess, yellow. All right? Pretty simple. You agree? You agree. All right. So again, that was a 1 minute time frame example of what a candle represents. So again, the body of the candle is the colored in area right here. This is your body of the candle. As you can see, have your bearish candle, that big, the dark red part, that is the body of your candle. The wicks show how high price came up, and then the bottom wick below shows how low price went to before the candle closes where the body is formed. Good? Bang, boom, Awesome. We understand that one. I would hope so. Remember, bearish. Bearish candle. This is your open, the top of the body. The bottom of the body is your close. The bottom wick's your low, the top wick's the high. Bullish candle. The top of the body is your close. Bottom of the body is your open. The bottom wick is your low, and then the top wick is your high. Got it? Bang, boom. Hopefully we understood that a little bit. So take a screenshot of that. Draw this in your notebook. Now you know the anatomy of what a candlestick looks like. Open, close, high, low. Awesome. All right, we're going to delete these. And we are going to go over time frames. So let's start with the daily time frame, right? So if we are on a daily time frame, each one of these candles represents where price went within that day within that day. That the candlestick literally represents where price went. It's that simple. So if we're on the daily time frame right now, we could see that price, zoom in on this candle. On this candle here, Thursday, July 3rd, 2025. Price opened up at this area right here. Make this white again for you guys to understand. Price opened up right here, the bottom of the body of the candle, right? And through this whole hour, or this whole daily candle, you could see sellers brought price down to the low down here. Right? The bottom wick. Price came all the way down to this low. Buyers push the price all the way up to here. And then price comes down and closes right here, which is the top of the body. All right? Same example. Bang. Boom. Here we go. This would be the high, the top wick. And we'll type this out one last time for you guys. And then we're going to give you a couple examples you can do on your own while you're watching. This would be the close. This would be the open. And this would be the low. So again, with this candle, you would see the daily candle. That this shows that buyers are most likely in control because they were more powerful. And as you can see, there you go. You know the open, close, the high, the low. Simple. Bang, bang, boom. All right, let's go over another example here. So let's go over a bearish candle, right? We already drew it out for you. We're going to let you do this on your own. So on this bearish candle, where would price open up? Give you 2 seconds. Give you 2 seconds. All right, after this bullish candle close, this bearish candle opens up at the top of the body. Price opened here. Highest point that this candlestick got up to within this day on Tuesday, July 1st is the top of this wick. Bang. The lowest where price got during this day was the bottom of this wick. Bang. And then the candle closed right at the bottom of the body of the candle. Bang. Open. Close. High. Low. Sweet. Bearish candle. Sellers were in control. All right. Another thing with the time frames. Hopefully I'm making enough sense here and I don't sound like an idiot. Another thing with the time frames is you see a daily candle right here. Each one of these candles represents where price went within that day. If we scale down into the 4-hour time frame, right? Each one of these candles shows where price went within those 4 hours of that hourly candle, right? So this is a 4-hour candle. This shows where price went within that 4-hour time frame. This is a 4-hour candle. 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 Go to the 1 hour. This shows where price went within the 1 hour time frame, right? Shows where price literally opened, closed, high, low. Shows you who's in control also, buyers or sellers. It's a candle like this, buyers are most likely in control. If it's a candle like this, sellers are most likely in control. Same thing, go down, 30 minute. All these candles right here show you where price went within 30 minutes. and then you continue down, 15-minute. All these show you the price action of where price went within those 15 minutes. 5-minute, 1 minute, same thing. All right? And I'm going to teach you how to use these time frames with the strategy later in the videos, so you guys got to be a little patient with that. But I don't enter trades just based off what a candle is doing. We're going to go off break of structure, liquidity sweep, equilibrium, Fibonacci, SMTs, order blocks, breaker blocks, liquidity sweeps. There's so much stuff that we have to put together on certain time frames, and then we just put all the puzzle pieces together, and then boom, you create a strategy, and hopefully that can make you start to become profitable or make some money in the markets. So one last thing that I want to go over, because I saw it on the 1 hour time frame right here. I want to go over what a doji candle is. So again, a doji candle is going to be when, as you can see here, you have two big wicks. Like, let's say, this is probably a better example. Boom, right here. So you have two big wicks, but the body is really small. So if you have a small body, like, let's say like that, and then you have giant wicks like that. Make this red because it's a bearish candle, but like this. If you see a candlestick like this, this just means that buyers and sellers basically, it was equal. There's no intended direction on where the market is going to go. So again, if you see a candle just like this, it's small body with big wicks. That usually means there's indecision in the market. So the buyers and sellers both just closed at a similar level and nobody's in control. Buyers aren't in control, sellers aren't in control. So again, that just means that there's indecision in the market. But again, I usually don't even pay attention to these candles. We're going to have to put all the puzzle pieces together and show what they mean and everything like that. But the open, the close, those all mean the same. If this was a bearish candle that closed red, this would be, again, the top of the body would be the close. I mean the open. The bottom of the body would be the close. This is where price, lowest point where it went to, and this is the highest point where price went to. But again, as you can see, this is a doji. This is a doji. This is considered a doji. This is considered a doji. This could be considered a doji. They just mean there's indecision in the market. Buyers or sellers aren't in control, and yeah, there's just indecision in the market. Pretty simple, pretty easy. But again, we also have something like, as you can see, this candle right here. That would mean buyers are in control, because again, you can see that again, this candle closed very bullish. So we'll draw this real quick. So let's say this is our candle body, right? We'll make this green just like for the example, just like this. But let's say we have a long wick just like this all the way down. This candle here shows that buyers are most likely in control, because price was brought all the way down here, right, to the candle's low. But you can see buyers ended up pushing the price all the way up, closing it very strong. That shows that buyers are in control. The price will most likely continue up. So same thing if you wanted to see a, let's see, where's that drawing again? I don't know where I'm missing it. Let's say same thing right here, but we'll make a bearish candle. It's a little too wide, but again, they still kind of looks the same. It's whatever. We'll make this a bearish candle with a long wick. Looks like Thor's hammer. That sounded fucking weird. What the hell? All right, you know what I mean. All right, that's a very good sign that price is most likely to continue down, because again, look, buyers pushed price all the way up to here, as we can see. They pushed price all the way up to this high, but sellers ended up stepping in, coming in control, pushing price all the way down before the candle closed, and then bang, candle closed right here, showing that sellers are most likely in control. All right, cool. Yeah, awesome. I think that's pretty good, right? Hopefully it's enough you guys can learn on that one. But other than that, I tried to just make that as, hopefully you understand what I just said. Again, candlesticks are pretty easy to understand. I don't use candlesticks for my entries and stuff like that. It's just good to understand the anatomy behind these candles and stuff, and what they mean and how they show where price is gone and closed and open and all that stuff. So Again, hopefully I understood, I explained what this means good enough for you guys. It's pretty simple. There's really nothing they have to put into this that's really hard. Again, go back and back test this on FX Replay and just watch how these candles open and close, or if you're on your demo account, watch how a candle opens and closes. Literally, if you look right here, can you guys see that? No, you can't. Literally on TradingView, you can see how much time is left. Like, we're on this 5-minute candle. Here's a good example. Look, we have 13 seconds left, 10 seconds left. We're gonna see where this candle closes. Ready? So again, candle opened up right here at the top. Sellers are in control, and they ended up pushing price down. Watch. Bang, new candle opens up. Price opened up here. Buyers are starting to push it up. And then, see, we created a wick. Price got pushed up to that area. Now it's starting to continue down. We don't know where it's going to close or go to next. We know where it opened. And then, yeah, we just see where the candle closes. By the time this timer's up right here, this 5-minute candle, because we're on the 5-minute time frame. And that shows us who is in control, where price went, and helps you read where the market might end up going. So, again, that's Candlestick Anatomy. It's pretty simple. Hopefully I explained it well for you guys. Remember to like and subscribe. Put that little bell thingy on for you guys to just know when I post a new video. I try and get these out every day or every other day, but so far I've been getting them out every day. But again, we're just going to keep getting better at teaching. We're going to keep putting these videos out. Hopefully I can explain this stuff good enough for you guys so you can understand how all this stuff works and how I use my strategy and how I just read the markets and hit the trades I trade. But again, we're just going to keep getting better and better every single day, every week, every month, and pretty much go from there. So again, hopefully I did a good job explaining this. If I didn't, just tell me in the comment. Tell me I'm a little special. And yeah, hate on me, whatever you want to do. I don't care. I'm just kidding. Don't do that. But other than that, we'll end this video here. I appreciate you guys watching. More to come. Be patient. We're starting off simple. We're starting off simple. Okay? If you already know what candlesticks means, you could already skip this video. But again, if you don't, you're just getting into trading. This is the simple stuff, and we'll get into the harder stuff as time goes on. We still have like 40 videos to make left. And we're going to try and get everything in each video for you guys, okay? I promise. All right, peace out.